All right, so welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and I teach my proprietary Safe Wheel options trade system for free. And the system is currently up 24% year to date, even with these markets that are down about 22%, somewhere in there, since the beginning of the year. Now, please type in the chat if you can hear me. Yes, so Charles, you can hear me? Good morning, Kevin. Okay, I just want to make sure you guys can hear me. Now, post any questions that you might have right now. That way I don't end the broadcast before I get to your questions. Sharon, sounds good, thanks. Deep South, yes. Okay. So, first, let's go over the earnings edge. Earnings edge is interesting. I made a slight tweak. Well, I wouldn't call it slight. I made a pretty good tweak to the earnings edge, and I really look forward to having some good results out of here. Ironically, we took a loss on Tesla last week, down over almost $900, you can see here. So pretty big loss. The way that we're trading the earnings edge now is I'm going to cut my risk down, but we're also going to be more asymmetric. So we're going to have way more upside, and we probably have a little more downside also. So it's going to add risk to the trade, but we're going to cut down on our sides. So there you go. So we are at $3,688 on the earnings edge. My current record is 21 wins, 8 losses, and 3 ties. And ever since I've implemented the 8 filters, my record is 6 wins and 3 losses. And we're down about 26% year to date. And that's what's going to happen with this system. You're going to get a lot of swings. There's a lot of volatility with this thing. But I think we're going to see some volatility to the upside, which is going to be pretty fun, pretty interesting. Okay, so let's get to the next system, which is the Premier Level 5. You can see my balance here, 32,178 right now. The Premier Level 5, what I like about it, well, obviously it's doing as expected. I mean, we're up 7% since we started on April 8th. The market's down 18% since April 8th. So we're doing what I expected. We're getting the returns I expected. The low volatility, we've only been down maybe 3 to 4% on this account, as opposed to the market down almost 20%. So it's doing exactly what what the back tests show. It's doing everything it's supposed to be doing. It's truly diversified. It's non-directional, and it's truly diversified. In other words, to be truly diversified, to be non-directional, you need to have a hedge, because when the market crashes, all assets become correlated. And if you're trying to be long something, it doesn't matter what it is. When there's a liquidity event, all liquidity is coming out. The only way around that is to be long volatility, and this system's long volatility. It's hard to be long volatility and also make money at the same time when the market's not crashing, but that's what the PL5 can do. So I highly recommend the PL5 if you have $30,000 or more. Okay, let's get into the safe wheel. With the safe wheel, currently up 24% year to date. Here's let's see here, which account is it? Yeah, this account here. So we started with $5,000. You can see here that we're at 6,220 approximately. Current stock is Uber. You can see Uber up. Uber has been kind of interesting. You can see what happened since we kind of got involved. We were up in here. I think we got in around $34 or something like that. We were up around here. You can see it dropped significantly. Uber has. And well, that's when you have the wheel strategy without a hedge, you would have got absolutely annihilated there, as opposed to, let's see if I can find the right place here. You can see with Uber up about $150 so far. So Uber's doing great, even though we had that crazy down move and we're trading the wheel, doing quite well with it. Where are we now? So last week, we sold the 2750 put, looks like, so if I from proper memory, and we got assigned. So we own this stock at 2750. We also have our put hedge on. You can see how our put hedge is very symmetrical. So the put hedge that we put on, I made it to where it would be as symmetrical as possible, and you can see it's really doing quite well. So when we get assigned and the market goes down, this hedge is protecting us almost, at a one-to-one basis. You don't want to overpay and you don't want to underpay for the hedge. So I've got it dialed in pretty good. So what do we do next? We basically trade the wheel. So we're at 2750 on Uber. Let's take a look at. So I'm going to go to the nearest expiration cycle. Okay. Let's see here. And we're at 2750. Can we get at least $27? Yes. So I'm going to go ahead and just sell a call against my stock because I can get at least $27 for it. So I'm just going to do that now. See if I can get maybe 30. Mid price is 30. I'm going to sell a call against my current stock. Okay, so we picked up another $30. Now I'm going to protect my hedge. I'm going to do that by buying a long call. And I want to pay no more than $6. I'll try to pay $5. Just one. I'm only trading one right now because my account's between $5,000 and $10,000. I might have to pay 6. Okay, so I just paid 6. So now I've got my wheel going where I own shares. I did a covered call and I'm protecting my hedge. My hedge is protecting me by owning these shares. And so as you can see, this is a good system. It's up, 24% year to date. Now, also, if you want to get the safe wheel guidelines, I have those available. So I have a flow chart that tells you exactly what to do, when to do it. And it explains everything that I just did here, but it also has all the details to that. There's a link in the description. And I also have a link in the description for the 6 filters that you use to pick the right stock. You want to be sized properly. You want to have your volatility done properly. You don't want to have something that doesn't have enough premium. You don't want to have something that has too much premium. And so you want to have that sized. You want to have everything done properly. So I have 6 filters and I have a link in the description. You want to get that. You can get both of those for like 89 bucks. I've been thinking about raising the prices. I haven't done that yet, but you can get both of those. Okay. Let's get into the questions. All right. Okay, you can hear me loud and clear. Javier, let's see, John. Good morning. Can you please show the analyze setup so we can all see how their P&L moves with the stock price? Sure. Let's see if I can go to the analyze tab. Okay, so here's your analyze tab. What is it trading at now? 26. So we're right here. So you can see that T+0 line. Look at that. Nice T+0 line there. That's what you want it to look like. So not a lot of risk. A little bit of risk to the upside, but not significant. Looks good to the downside. Great T+0 line there. That's your goal. You want to have a T+0 line that just is above the break-even line. Kevin, you can hear me? Thank you. Eric, good morning from the DC area. Okay, Will, Uber is coming up on earnings. Let's take a look at that. Make this smaller. I guess it's not really showing up yet, but it is coming. Okay. How beneficial do you think this will be to our hedge value? Well, it'll increase our hedge by a little bit, or let our hedge kind of hold value a little bit over, maybe during that week of earnings. But I don't think it'll be overly significant because we're really far out of the money. What's good is the close to the money stuff is going to go up in value, and we're going to be able to sell it. Would it make sense to look to close out if the hedge goes really high? If it falls within the rules, I mean, if the stock goes down and it's too far to write a covered call, and you can't get the call, you can't get it at a premium, and that hedge is really paying you well, then I would say yes. Close the whole thing out and start over. And Will says it's in a couple weeks. Yeah. Okay, well, I look forward to that. I mean, we don't change, or the safe wheel doesn't have any parameters to change the system or alter anything based on that filter of earnings. So earnings are coming, doesn't matter. We're not going to change anything. Okay, it looks like I've gotten through almost all of the questions, unless there's any other questions. I'll give you guys just a second here if you have any more questions to go ahead and add those, and I can answer them. One thing I always like to say is if the P&L is not real, what else are they trying to conceal? I always want to get that in there. Okay, Jerry, is the level 5 easy to learn? It is if you've been trading options for a little while. If you understand the wheel, you probably do pretty well. You pick up on the level 5 pretty quick. The wheel is a level 5 system, but I'm talking about the premier level 5. You'll pick up on it pretty quick if you've been trading options for a little bit, 3 months, 6 months, even a year sometimes. It just depends on the individual. Okay. Sorry, I'm new and I don't understand what that purple line represents on the Analyze tab. Can you explain? Okay. So this is the expiration line right here. So this is what happens at expiration. So let's say that expiration, we expire and we're at 29.49. We would take a loss of around $75, however it correlates with this side. So this is what happens at expiration. Right here, we would break even if we got the 31.32 or 28.09 at expiration. But this is today. This is the T+0 today line. So if today, you can see that here we are today, you see 25.97. You can see that we're up $3. If today we went to 28.11, we'd be down $3.79. If today we went to $31, we'd be up $32.72. See that? This is the today line. This is this bluish line is the expiration line. What happens at expiration? And I believe this expiration is based on the end of this week, not on the expiration of the put hedge. Okay, I hope that makes sense. Okay, Scott, if Uber was down under the short put was, where was the short put? well, was the short put that we had was 27.50, so it did go under the short put from last week. Okay. And the short put from last week had expired worthless. So the short put's not going to expire worthless if it's in the money. We would have gone into this morning unprotected. I'm a little confused because a short put would not expire worthless if it's in the money. So you might want to rethink that. Unless I got that wrong, you want to rethink that a little bit. Okay, Scott. If there's a proven way to protect the put hedge over the weekend, when there would not be a stock hit. Yeah, so that is one of the weakness, I guess, of the system is that over the weekend, that put hedge is not protected. And I haven't ran into that. That's kind of a low probability problem that even through back testing and forward testing, it's never been a problem. But it could be. It could happen. Okay. Carl, I'm up around 200 bucks on Uber so far, about $50 more than you. I also did not roll down my hedge. Okay. Wondering if that would account for the difference. I'm sure that it does. I'm sure that does. So your hedge is higher than mine. Mine is at 22.50, and yours is what you said, it's higher than this. So obviously this would be higher than $150, the profit on that hedge. So that's probably why you're up. Mahesh, which of your courses do you suggest for first-time options learners? I have a course called Options from Day One. It's got 7 videos in it, which is really good for the beginner. And then from there, you want to go on to Tasty Trade to learn more. I would not trade like Tasty Trade, but I would learn from Tasty Trade. They've got really good learning, really good. It's a really good place to learn. Okay, Scott, if it was not under the short put. Okay, so it wasn't under the short put. I would have just kept that premium. I would just be holding that put hedge with nothing else. So yeah, again, it would be the same situation where I would not be, my put hedge would be just sitting there all alone over the weekend, not hedged. And like I said before, yeah, that can happen. That could be a potential problem, but so far it hasn't. And I'm willing to take the risk on everything else that this system provides for that risk. Maybe he means the $5 long call that protects the hedge. Yeah, exactly. Okay. Scott, sometimes I buy my call the week before if I feel like it's not too expensive. In other words, you buy it. So you've got a call a week out that you're. Oh, okay. I see what you're saying. So instead of buying your long call on Monday morning, you might buy it on Friday afternoon. Okay. That makes sense. It's not a bad idea. My hedge is at 25. Yeah. I didn't want to buy the new one thinking it would save me on another commission fee. Yeah, that's not a bad idea. It's not really the way I back tested the system, but and it's kind of a little kink that you can add. And once you understand this system, you can kind of tweak it the way you like. And that's not a bad idea at all. You know, it would be nice to be holding that $25 hedge. You know, you're obviously up $50 more. So that's a pretty good thing. Okay, that looks like that's about it. And remember, if the P&L is not real, what else are they trying to conceal? We'll see you guys next week.